Hey there, it's Francis Hunt, Senior Lecturer at LAT on Technical Analysis, and also we look at the macroeconomics and the economic fundamentals, and I'm going to talk about a little bit about that today with regards to the UK economy. Well, what's the news and where do we stand on the UK economy? It's my distinct view that we're setting up for a large splurge of quantitative easing that's going to come across most of the Western markets shortly. Why is that? Well, let's stay with the UK first. We had our Q1 figures, GDP figures, that were negative, that pushed us into a recession, technical recession, because Q4 were also negative. But we had the Q1 figures revised further downwards from minus 0.2% to minus 0.3%. So in other words, a very bad negative quarter was revised furtherly down, which shows how weak things have become. Within that, and data that's followed subsequently, we actually had a very bad retail consumer spending number, expecting minus 0.8, and we ended up having a number in excess of minus 2%, showing that the consumer themselves are feeling certainly extremely pressed. In other words, between tax and covering increasing costs in an inflationary environment, disposable income is reduced and retail expenditure is certainly getting less and less. So people are battling out there. What else? Well, we had the IMF and they made various comments, and George Osborne met and spoke to Lagarde. Largely she seemed to be very much of the traditional French school. As head of the IMF, she was talking about, thank God we did quantitative easing measures, and you know, austerity can only take you so far, etc., etc., suggesting, and the key points that came out of her were further rate cuts. Let's bear in mind we're on 0.5%, so we've come all the way from 6, 5, 4, 3, 2, 1. We're down at 0.5%. The monetary toolbox has largely had all its scope to be used, but she's suggesting further cuts, I assume to 0.25, maybe even beyond that, and most certainly where required further quantitative easing. Now this tends to have a very later inflationary effect, because currency destruction, which is what quantitative easing is, it's a dilution, leads invariably to inflation. However, if we also have Europe and the American northern continent doing the same thing, you get what's almost considered competitive currency destruction. So trade between those major blocks tend to remain consistent, because even though you're destroying your currency, and things that you buy from those nations should cost more, if they're pursuing a similar strategy, all three of you collectively weaken. So then it's the BRIC nations that are then left, and imports from there obviously then go up in cost, and that's where the inflation is imported through following that currency destruction. So my big take on the current macroeconomic situation, both from a UK perspective and for the West, is that things are exceedingly weak. They're weak in Europe too, and obviously we've got the rolling crisis there's no decisiveness on, and even though it goes through cycles of optimism, it invariably leaves you feeling that there's no clear solution being put forward. Is that further quantitative easing is highly likely, and for those of you that trade, bear this in mind. So this will obviously have an effect on the risk on and the risk off environment, and the equity markets are thoroughly down. We know the Fed likes to watch the S&P far more than they admit, on the basis that certain assets are worth keeping inflated to a degree. So I'd expect quantitative easing and possibly upside if that is announced for both gold and shares and other risk-on assets. I hope this has been interesting for you. Please rate and share, and I look forward to giving you my economic take again. Have a great week ahead. Goodbye.